students, welcome to my class. In today's class, we would see another question on cash budget. This can help you understand the concept of cash budget a bit more better than the previous session. The previous session, we had a very simple question. This time, we are going to have a couple of other adjustments too. This is the question I have for you. The question is, from the following information, prepare a monthly cash budget for the 3 months ending 31st December 2022. Month, June, July, August, September, October, November, December. 3,000, 3,250, 3,500, 3,750, 4,000, 4,250, 4,500. Now, sales are your immediate cash receipts. Okay, so we should look into the conditions as far as the credit terms are concerned and accordingly take our immediate cash receipts. Materials are connected with your expenses incurred, and here too we have to see if there are any kind of credit period allowed. So materials are basically the raw materials that you have purchased, and purchases means you have, we assume that the materials are purchased on a credit basis. So there is definitely creditors coming in place. Wages, production, administration and selling overheads are basically the overheads. Now, what are the adjustments provided to us? The credit terms are, in case of the sales, the 3 months to debtors. And what does that mean? If you happen to sell in the month of Jan, you're bound to pay it in the month of, say, after 3 months, February, March, April. April, you will have to clear it in the sense that the debtors will have to pay you. You should be in a position to collect all of those from your debtors within April. But however, they say that 10% of the sales are on cash, which means 90% only is on credit. So 10% of sales are on cash means 10% of June month sale. For example, 300 rupees, 10% of 3,000 is 300. 300 would be received by you the same month. However, 90% of that month sales receipt shall be received by you a little later. Now, what is the condition there? On an average, 50% of the credit sales are paid on the due date, which means 50% of that 90% credit amount is paid on the due date. That is after the 3 months to the debtors, after 3 months, while the other 50% are paid in the following month, which means it is after the 3rd month, 4th month they are paid. Creditors for material, 2 months. So which means the suppliers are allowing you a credit period of 2 months. So that which you have purchased in the month of June will be paid by you in the month of August. It goes on that way. Okay. Lag in the payment. Lag is basically the delay. We have wages, production, administration and selling overheads. Wages, when they say 1/4 is a lag, this also means that 3/4 of the month's wages is paid within the same month. 75%, which means 75% of the wages that you have incurred is paid within the same month. However, only 25% of that is carried to the next month. Overhead, half a month. Now, what does that mean? So there is only delay. There is a delay of making the payment on overhead. Overheads in this case is production and administration selling overhead. So therefore, half the month, when I say half the month, 50% of the production overhead shall be paid the same month, while 50% of that shall be paid in the next month. The opening cash and bank balance, which is on 1st of October, is expected to be 1,500. That's given to us. And the other information is plant and machinery to be installed in August at a cost of 24,000. So they're planning to install a plant and machinery in the month of August, which costs you around 24,000. And this will be paid by monthly installments of 500 each from 1st October. So 500 each every month. You shall. So your EMI is starting from October, and 500 rupees is the total monthly installment, which is also your expense. Preference share dividend at the rate of 5% on 50,000 are to be paid on 1st. So preference share dividend, 5% of 50,000 is 250. So that shall be paid only in the month of December, which is also the cash payment. Calls on 250 equity shares at the rate of 2 per share expected. So calls on 250 equity shares, that is, whenever you have issued your shares to the public, there are actually different stages. Today we have IPO, so we don't have any such stages any longer existing. But however, from the theory point of view, we need to understand this. There is, after your application allotment, we have the first call, second call, final call. So one such call is this call. And there is a call on 250 equity shares at the rate of 2 per share. Which means when you have calls on 250 shares, there is a receipt of money. So there is a cash receipt. So 250 into 2, 500 rupees shall be received in the month of November. Again, we have dividend from investments, which is amounting to rupees 250. So which is again our income for us, which is expected on 31st December. Advance income tax that needs to be paid in December is 500, which is a payment. So if you look at the items, there are a combination of both the receipts and payments. Accordingly, we may have to take them in the respective places. Like I said in the beginning and in the previous video too, I told you that opening cash balance, add to that the immediate cash receipts minus the immediate cash payments, that would give us the closing cash balance, and the closing cash balance will be carried forward to the next month, and that's how we do it for the entire month. But then what they have asked you is to prepare the cash budget for 3 months ending 31st December. So which means December, November, October. So you are told to prepare the cash budget for 3 months only ending. So December should be the last month. So October, November, December should be the cash budget prepared for. So based on that, I have already prepared the solution for you. This is how the solution would look like. But there are a couple of adjustments that you have to know. So as and when I do the adjustment, I'll let you know as to how they are arrived at. So we take the name of the company. If the name of the organization is given to us, we take the name on the top middle and write cash budget for the month October to December 2022. Okay. So opening balance. Now opening balance is given to us, which is 1,500 rupees. Where is it? That's given to us here. Okay. The expected cash and bank balance is 1,500, and that is what is this. So to this, we're going to add up the immediate cash receipts. Now, one of the important item that we have under the cash receipts is the sales. Okay. The two things here, one is the cash, instant cash that you have collected out of the sales. The second one is a collection that you're making out of the sales. So let's understand how they are all arrived at. So I've taken the direct answer over here. How did we get this answer? Let me take you through that. Basically, we are told that there is a sale, right? So sales is 3 months to the debtors. 10% of the sales are on cash. On an average, 50% of the credit sales are to be paid on the due date, while the 50% are to be paid in the month following. What does that mean? Now, which means that, now although we are told to prepare the budget for October, November, December, I have taken this for our easy understanding. So this is one such, one of the working note. You can refer to this later, but for easy understanding, I've taken this portion. You can just have a look at this alone. Now, students, we know in the month of June, we have 3,000 rupees, which is the sales. Okay. But yes, we are going to prepare the budget from October only. But then let's understand one thing, that there is a 3 months credit period allowed to the debtors. So what you have sold in the month of June shall be received by you in the month of September. And July's you shall receive in the month of November, and it goes on so on. It goes on that way. For instance, now what did I say? June, you have sold to the extent of 3,000 rupees. 10% of that is a cash sales. So that is 300. 90% of that is 2,700. Now, 50% of this credit, 50% of this 2,700 shall be received by you after 3 months. So June, July, August, September. You're going to receive that in the month of September. So 2,700 divided by 2, you're getting 1,350. 1,350, that is due after 3 months. You shall receive it in the month of September, and 50% of the credit amount, 50% of this 90% of the amount, which is again 1,350, you shall receive it in the month of October, because they say you're receiving it in the following month. I repeat this once again. What you have sold in the month of July. Now, what is the sales in the month of July? 3,250. 10% of that is 325. 90% of that amount is 2,925. 50% of that credit, that is 50% of this 90% of the amount is actually 1462.50. Now, this shall be received by you in the month of October, right? So, July, August, September, October. Then, the balance 50% you shall receive in the month of November. So, that is how we have tried to get all this amount, and we have written due after 3 months and received the amount from the debtors following the due date. I've added all of them. So all these columns are not important for us because we are preparing the budget only from October. So October, November, December. So I've just totaled all of this. If you just have a look at it, cash is around 400, and what you have received is, if you look at this, 1,462.5 plus 1,350, this will be equal to 3,212.50. Yeah. So your cash plus your this due after 3 months, and what you shall pay after the 3rd month, the balance of it is equal to 3,212, and we have tried to take it for all the months. The same amount has been taken here in your receipts. Yeah, and you have a dividend that you shall receive, which is which I told you, no, you have a dividend of rupees 250 that is expected in the month of December. That is what is this. And out of the calls you have, say this is call amount, right? So share call amount. So you are receiving calls on 250 equity shares at the rate of 2 per share, and that is what has been taken in the month of November. So whatever is the receipt I've taken over here, and same way payments. Now what is spoken about the payment? Now if you look at your materials, they have said that creditors for the material is 2 months. So which means your creditors, your suppliers are allowing your credit period of 2 months. So what I have bought in the month of June, so July, August, so August I shall pay. Okay, July I shall pay in September, it goes on like that. So going back to my payment, 2,400, how did I get this? See, we are preparing for October. So August you have actually a material of 2,400, and that shall be paid in the month of October. So that way I have taken 2,400. Same way, look at this, 2,250. So you have 2,250 and 2,300. Wages. This is another one calculation everybody will have to understand. So let's understand this from this working note I have prepared for you all. So this is the wages calculation. What is the instruction that is provided to us? They very clearly said that the wages is 1/4th month. So which means there is a delay by 25%. So whatever you are incurring, the wages is paid, 75% of that amount is paid within the same month. However, 25% of that is paid in the next month. So which means if in case I have a 650 rupees wages incurred in the month of June, 75% of it shall be paid the same month, while 25% of that will be paid in the month of July. Same way for July, August, September. Now since we are preparing for October, let's take October. 800 rupees is the total wages. 75% of 800 is 600. 200 rupees will be paid in the following month. Same way, September if you have taken, 75% of that amount would have been paid in the same month, while 25% of that shall be paid in the month of October. So due to which, if you look at the wages paid will have a different a number altogether. So therefore, the wages that is incurred for the month of October, November, December is 787.5, 875 and 975, and that we have taken it here, right? And same way we have production. What is said about the production? In case of the production, it says overhead is half a month. So yeah, overhead in general they have specified. So we have only two overheads here, production and admin selling overhead. So that's applicable to that. Half month's production and administration overhead. So how do we calculate? So let me take this as for production overheads. Okay. 50% is paid the same month, while 50% is carried to the next month. So what you have incurred in the month of June, 225, 112.50 you shall pay it the same month, while 112.5 you shall carry it to the next month. So going back to October, we have incurred a production overhead of 300. So 50% of that is 150 rupees, while 150 rupees shall be paid in the month of November. Same way, September, we have again had a production overhead of 300 rupees. 50% of that is 150, while 150 rupees will be paid in the month of October. So same way, we have tried to apply the conditions to the month of November and December, and we got to know that the total production overhead that needs to be incurred or need to be paid in the month of October, November, December is 300, 325 and 350. Going back to the statement, look at this. That is what I have calculated and kept it ready here. Admin also. There is no absolutely changes here in case of the administration overheads too. Administration overheads, okay. Say let's take October directly. 200 rupees is the total admin overhead. 50% of that is 100. So 50% shall be paid in the month of November, and that you have incurred in the month of September. On 175, 50% of that is 87.50, while you shall pay 87.50 in the month of October. And we have tried to apply the same way for October, November and December, and we got a total of 187.5, 200 and 212.5. Let's go back to the statement and see this is how we have got administration overheads. Plant during the year. Now they very clearly said that plant and machinery has to be installed in August at the cost of 24,000, and the installment is paid which is around 500 rupees each from 1st October. So we have 500 each, 500, 500, 500 is the installment amount. Preference dividend is paid, which is close to around 2,500 rupees. 5% on 50,000 is 2,500 rupees. And income tax paid is around 500 rupees, and that is also done. So what we have done is we have added up all the receipts together and got this, deducted all the expenses. Actually, the total of this payment is around 4,175. So 4,712.50 minus 4,175 is 537.5. So this is the closing balance in the month of October, and we have a surplus, and this shall be carried forward to November. Add all this together, we got a total of 4,500, deduct all the expenses, and we got a difference of 350 rupees. Closing balance of November shall be carried forward to December, which is 350. Same way we have added this to the other important receipts, and we got a total of 4,312.50, and the total expenses is close to around 7,337.50, which means your expenses have overshot, okay, and there is definitely a deficit. So your expenses incurred are a bit larger, bigger in the month of December, and you get a negative amount, which is 3,025. So there is a shortage of money. You know, basically what we understand is when we are trying to give this information to the management, we're giving them a larger picture of the organization, especially with respect to the working capital management. Now, when you say that we are adequate, we have adequate cash in the month of October, November, while December, since our commitments are a bit larger and our expenses are going to be a little bigger as compared to the previous months, when you pass this information to the management, I think they should be ready to either raise money while they take the loan from the bankers, or maybe by the issue of debentures or whatever. However, you're passing this information saying that yes, there is shortage of cash and please make the arrangement. So cash budget is one of the important estimates. It's one of the important tools with which you get to know your estimation with respect to your cash inflows and outflows. So with this, the solution is done. Thank you for watching. Hope you have understood this.